The trajectory is clear and it is obvious. We are talking about a fundamental shift in the way that our reality is organized. I mean, it's not exaggeration to say that, right?
You're listening to the Startup Podcast. This is a Reacts episode. Industry insiders having frank debates about the latest tech, politics, and business news. Whether you're a founder, investor, or operator in a startup, you'll gain insights into how current events connect to broader themes and trends that impact your startup, your investments, and your day-to-day operational decisions. The conversation starts now.
Hey, I'm Chris Saad.
Hey, I'm Emil Michael.
And we have a short but action-packed episode for you this week. We have a limited recording window, but we wanted to get in and talk about the latest stock market action. There's been massive corrections, adjustments, crashes, some people might say. What does it really mean? Is this the end of the AI hype cycle? Is Nvidia all over? Or is there still room to invest and room to go to the moon? We're going to discuss that and some philosophical stuff about tech and the future of labor and capital allocation. So stay tuned for all that and much more on this week's show after the break.
Whether you're starting or scaling your company's security program, demonstrating top-notch security practices and establishing trust is more important than ever. Vanta automates compliance for SOC 2, ISO 27001, and more, saving you time and money while helping you build customer trust. Plus, you can streamline security reviews by automating questionnaires and demonstrating your security posture with a customer-facing trust center, all powered by Vanta AI. And it gets even better. Just for TSP listeners, you can get $1,000 off Vanta when you go to vanta.com/TSP. That's VANTA.com/TSP for the Startup Podcast to get $1,000 off.
All right, before we get started, let's talk about the Startup Podcast Pact. As always, we ask you just one favor in return for getting value from this show. Please rate us and review us in your favorite podcasting app. Subscribe to us over there. And also subscribe to us and ring the notification bell over on YouTube. It helps us grow the audience, helps us grow the show, and helps us get great guests and keep doing what we're doing. And ultimately helps us help more founders like you. So with that, on with the show. All right, so for our one and only topic today, we're going to talk about Nvidia and all the other major tech stocks having a major correction, a major adjustment, a major crash, some might say, over the last 2 weeks. Nvidia, I believe, is somewhere in the land of 30% off their highs. Blackwell is delayed, and there's definitely been pullbacks across the board. The S&P 500 is pulling back. Is this the correction we had to have, and it's just a blip on the way to the moon? Or is this really the beginning of the end of that hype cycle and a massive deflation back to the ground as people start to adjust their expectations around AI and how fast, how high, and how well this really can go with this AI revolution? Emil, what do you think? You know, you're a capital allocator. You pay close attention to this stuff. You even moonlight on CNBC. I don't know why you slum it with us over here. You've been watching this closely. What do you think about the public markets, the corrections in the Magnificent Seven, and the AI hype cycle? Is it over? Is this an opportunity for people to buy in or accumulate some more? What happens next here?
My thinking is it's very hard to look at what is relatively small movement and be like, oh my God, is the world coming down? So yes, Nvidia, I'm looking now, hit a high of $140 a share. And today it's 107. So that is a 30-ish% drop. But it was $42 a share a year ago. So it's 2.5x where it was. It is a special case because it's this incredibly unique link in the chain. So then the better question is like, okay, Mag 7, like you said, why are they all down? I think these things have like a huge run-ups in the last year. Every hype cycle reflects in the stock market. AI hype cycle reflects in the stock market. And then you do get this like, oh my God, they're spending $50 billion on infrastructure. You know, where are the use cases? Apple's AI is late. There's no new reason to buy the iPhone 16. You know, we don't really know if that's real or not for a couple of quarters because it takes a while for reality to play out because these stocks are trading on the future, not on the quarter as much. So if a few quarters from now, you know, there are some massive new AI use cases, which we all believe like they're likely to be, then you'll kind of hit the trajectory again. If there's overspending and people are like, wow, there's not as many use cases as we thought for AI yet. Well, then you might go through this like year or two of like, well, maybe we got over irrationally exuberant. So I guess I'm not I'm not a day-to-day momentum thinker on this as much as like, let's take it in 3, 6, 12 months intervals.
I think if you are a professional trader in one of these massive firms, you need to be making money every quarter with other people's money, right? Your performance is measured quarter in, quarter out, and you need to panic and you need to go, oh my God, I don't know if this revenue and this reality is going to come in this quarter or next quarter, and I need to not get ahead of my skis, and I need to move money around, and I need to be doing my job. But at the end of the day, it's been proven time and time again that most of these guys don't actually beat the S&P 500. So it's like, what the hell? What are we wasting our time with management fees for? I think if you are maybe a swing trader or maybe you are a long-term investor, the trajectory is clear and it is obvious. We are talking about a fundamental shift in the way that our reality is organized. I mean, it's not exaggeration to say that, right? When you think about a clearly useful AI substrate that exists today, that is only going to get better and better every day. It's the worst it's ever going to be today. Just think about your iPhone, right? Think about your TV. Think about your car. These were technologies that were not capable of innovating and iterating on themselves. AI is a technology that will and is helping to build itself. You are talking about multiple exponentials on top of each other. And then you talk about embodied AI, like robotics and vehicles. I don't care if that takes a quarter, if it takes half a year, it takes 5 years. There is this very small number of companies poised to tax and benefit from this fundamental shift in the world. And I think I mentioned the episode before, on the show before, if Silicon Valley was taking $4 or $5 or $6 out of every 10 in the world economy, by the time this transition is done, and I don't know how long it'll take, I think Silicon Valley and companies in its image will be taking $8, $9, $9.50 out of every 10. And so that's my bet.
Yeah, and the question for people who are not holding something for 20 years is, you could get stuck like we did with driverless cars, where the timelines were just off by 5 or 7 years. If you didn't have that patience there, you were betting on something that has a long trough of disillusionment. Another example I've been thinking about lately is these GLP-1s, these weight loss drugs. Every week there's some revelation about some other benefit. I'm sure there's going to be some cost, but then you're like, holy cow, how many people in the world have diabetes? How many people have arthritis because they're overweight? Or how many use cases does this thing have? It seems to only grow. And then what are the downstream effects on the healthcare system if people are like literally that much like significantly healthier and the obesity crisis is like stopped? Like 4 companies are going to benefit from that, like even more concentrated than AI is. It's concentrated in a very small number of companies. The downstream effects, like could that go through a trough of disillusionment if they find some side effect that's like they don't know now? Yes. But the North Star, just like with AI, you see it. It's there. It's just like, when is it coming, right?
There are whole movies and books about it, right? And I mean, it doesn't take that much imagination. And if you are a curmudgeon that can't see the future on AI after watching countless science fiction movies, then I don't know where you're burying your head.
Over 7,000 global companies like Atlassian, Dovetail, FlowHealth, and Quora all use Vanta to manage risk and prove security in real time. Why aren't you? Get $1,000 off Vanta when you go to vanta.com/TSP. That's VANTA.com/TSP for the Startup Podcast to get $1,000 off.
You know, you talked about this driverless car thing is, it's coming. Someone said to me, remarked the other day, I met them, they're from Australia, they'd just come to Silicon Valley for the first time. And they were saying, man, only in San Francisco are there cable cars, a decades, hundreds-year-old technology right next to driverless cars. And that's the advantage of living in San Francisco, is that the future is here today, right? And driverless cars are here today. There are countless people getting into and out of driverless cars every single day. So if you are in Brisbane, Australia, my hometown, if you are in the Philippines, if you are in Europe, and you are not seeing that lived experience, it's easy to think of these as distant future possibilities. I'm fond of telling my wife, when I lived in San Francisco, I would get a Spoon Rocket, and I would get Postmates, and I would get, I think maybe DoorDash came out somewhere in there. I'd get Uber Eats. I'd be taking Uber black cars. Before that, I was taking sidecars. Shout out to Jahan. I'd be taking, before that, there was Taxi Magic, right? These things were ordinary in San Francisco 10 years, 12 years before anywhere else. And we were experiencing, Emil, the portal-like, the teleporter-like experience of press a button, get a ride every single day. And I went home years into this and said to my friends, I'm going to go work at Uber. And they're like, what do you mean? Are you going to be a taxi driver? Because they didn't know what Uber was. They never experienced it, right? They didn't understand the technology behind it. And so this is a long way of saying to people who are listening to this show that are not in San Francisco, the Bay Area, not in one of these tier 1 markets. Some of these things appear like weird techno bros or nerds or billionaires on the All In podcast waxing lyrical about some possible future. But if you're in the right market, paying the right kind of attention, you'll realize these futures are here already, and you may just not be paying attention enough and maybe just being a little bit too cynical or skeptical.
Yeah, I mean, despite San Francisco and California's attempt to destroy innovation in that state, like done everything possible to make it inhospitable to businesses and entrepreneurs, it remains an incredible place to see the future. It just does. And I do think there's some tragedy in that too, in that when you're in London or Paris and you don't have that same view, and then the politicians pre-regulate, they don't get to see the future in those cities. So it becomes scary. And when it becomes scary,
they don't get to participate.
Yeah.
They don't get to participate. It becomes scary. So then the citizens aren't allocating capital, even in the public markets, to those things. They're not noticing the problems that those new technologies create. So it's like, okay, well, now I see Uber on the street and I live Uber. Well, now there's an opportunity to do in-car advertising. There's an opportunity to do in-car merchandise. There's an opportunity to rent cars to Uber drivers. There's an opportunity. You are seeing the new problems created by the new set of technologies just through your lived experience of living in the future, right?
Yeah. And then you realize, well, it's not so scary. There are problems we have to solve, but it's not so scary. And people always ask me, like, why did you guys not ask for permission? You asked for forgiveness at Uber. It's like, it's because of this phenomenon. It's like, if you show people what it could be, then they'll go like, okay, I get it. Let's like deal with the downstream impacts of that. But if they never get to see it, it's going to cause fear and stagnation. And you saw this letter from the European, I think, former President Draghi today about what's the problem in the European economies. And it's like this notion of stagnation, this fear of the future, this set of laws and regulations that keep entrepreneurs and innovation back. So they don't see any of that. And then look what's happening in their economies on a relative basis.
It's funny you mentioned that idea of people can't see it, they don't see it. I literally stopped the work I was doing with my advisory to record this episode, of course. And what I was working on there was a vision document for 2035 for this company that I'm the fractional chief product officer for. And my argument and my reasoning for doing this is I was saying to the CEO, this conservative board we have, this conservative investor base we have, how can they invest in the future unless we paint that future in vivid, compelling, clear narrative? Let's describe for them what this company looks like in 2035. Let's paint that in stark relief and in compelling narrative and make it seem like the most exciting and most inevitable thing they've ever heard. So the reason, again, I'm telling this story is because if you don't live in a San Francisco, you need to start paying attention to those markets to understand the future. But if you're in a company surrounded by conservative people or a conservative board or conservative investors, consider painting your vision in stark relief and vivid detail. Now, there's a balancing act here, right? You don't want to feel like you're untethered from reality and you just have no means from getting from here to there and it's all science fiction nonsense. But if you have a very pragmatic present and you've got a demonstrated ability and capacity to execute, and you can create a very pragmatic roadmap from here to some imagined future, that at least loosens people's grip on their skepticism, even just a little bit. It just moves the ball forward, right?
Remember, London was a center of financial innovation for a long time, right? It allowed the free markets and like there was a lot of innovation there. Paris for art or Florence for art, like, a lot of great cities in the world had their moments where they were pushing the envelope on some new thing for humanity. And now in some ways, like the Asian markets have more optimism on this stuff.
Mm-hmm.
A little less China now than 5 years ago, but like Indonesia and Singapore and some of these, like where they're pulling in entrepreneurs in, they're pulling ideas in. even Saudi is trying to change sort of the nature of the fear-based nature of this. And so it is something I worry about in our country too, never getting too comfortable with status quo.
To bring this all the way back around to the origin of the subject, I do think, we're not financial advisors. We're not giving you financial advice. No one can predict where the bottom is for this correction, this real adjustment. But I for my money, I'm talking about on my own personal decision making. It sounds like, Emil, you're roughly on the same page. I'm just buying the dip and holding onto my ass. Like I have a 10 or 20 year time horizon, right? And so to me, I just accumulate this stuff as fast as I can and as meaningfully as I can. And, someone asked me once about diversification, and I was musing to my wife the other day. She's, that you can be told how the best people work, but it's often people don't change their behavior anyway. Like, so Warren Buffett will talk about this idea of hedging is just another way of saying you don't know how to do your job if you're a capital allocator, right? He's like, this diversification and hedging thing, he's like, I don't understand it. He's like, develop a strong intuition or opinion about how a business works and invest in your top 2 or 3 ideas, period. Like, what are you diversifying into? You're just admitting that you're throwing shit at the wall. And so for me, again, I'm not giving financial advice. I'm just explaining my own philosophy. I do believe that these companies are going to be running the world. They're running an intelligence layer and a labor layer that I don't know what the hell else everyone else is going to be doing. And so I'm pretty concentrated.
Yeah.
I'm pretty concentrated in my portfolio.
Look, and I think different people are different circumstances, right?
Of course.
You and I bet our time, not just our money, on concentrated bets, right? That's what the tech industry sort of innovated, frankly. It's like, so you get startup stock.
Yes.
And therefore, like, you're way long in that company.
That's right.
Relative to being an employee at AT&T or something. So, but I've heard the same thing from 2 people outside of Buffett. It was like John Doerr, who was one of the famous venture capitalists at Kleiner Perkins, who invested in Amazon, Google, and he said F diversification. He's like held every share, through 20 years. Steve Ballmer is now richer than Bill Gates because he held on to everyone or, most of his Microsoft shares. So you see that playing out. Like, yeah, and then the Peloton guy blew it all, right? So there are counterexamples, but
well, I'll tell you what, when I was first getting into investing, I was early on just a startup entrepreneur, founder, grinder. I just grind, head down, bum up. The only equity I owned was the companies I founded or that I joined. When I started thinking about capital markets, public markets and property and whatever, I was racking my brain. I'm like, wait, first let me understand, what is the universe of possible investment vehicles and what are the trade-offs and what's the ups and downs and how do I know where to put money in the stock market? And what I came to realize was, hang on a second, I have a massive unfair advantage. I've lived in the future in San Francisco. I use these tools every day. And 99% of people seem to have no effing clue because they don't engage or pay attention. And so all I have to do is buy the companies I believe in and use and know. And like, it doesn't come it's not any fancier than that. And I realized, if you're listening to this show or watching this show, or you watch a few of these kind of tech shows, you're paying attention to Silicon Valley, you are probably already ahead of the game. And you can listen to all the FUD and all the cycles and all of the whatever. You already know more than most. And it's surprising how much you know compared to most. You will be surprised.
With that,
yes, we got a short recording window today. So thanks all for joining us. Emil, thank you for joining me as always. How can people find you on the internet?
On X, formerly known as Twitter, at Emil Michael. I'm sure Twitter will be afire with the debate tonight, but that's where you can find me all the time.
That's good. Yeah, then we have a watch party for the debate tonight. So you're probably listening to this tomorrow, but next week we'll give you a rundown of what we thought about the debate. And you can find me on all the social media and on my website, chrissaad.com and chrissaad.com/newsletter. Until next time, see you later, guys. Bye-bye.
Today's episode of the Startup Podcast was brought to you by Vanta. Vanta automates compliance for SOC 2, ISO 27001, and more, saving you time and money while helping you build customer trust. Plus, you can streamline security reviews by automating questionnaires and demonstrating your security posture with a customer-facing trust center, all powered by Vanta AI. Over 7,000 global companies already use Vanta. Why don't you? Get $1,000 off Vanta when you go to vanta.com/TSP. That's VANTA.com/TSP for the Startup Podcast to get $1,000 off.